Hi dentist, today we're going to go over the financial statements of a dental practice. We're just going to go over the balance sheet and the statement of income and expenses. Just to clear it out, statement of income and expenses and profit and loss statement are the same exact thing. So if you're interested, stick around. So let's start with the cover page. This is telling you that these set of financial statements are for My Demo Dental PLLC. It's telling you that it is for the 1 month and 6 months ended June 30th, 2025. Okay. Let's go to the balance sheet. The balance sheet is always as of a specific date. Okay. This is telling you this balance sheet is as of June 30th, 2025. Okay. Balance sheet includes all the assets the entity owns and all the liabilities that the entity owes to somebody else, and includes the equity of the owner of the business. So let's start with the assets. If you look here, group 1 is just telling you that, okay, you have, or this dental practice has 2 bank accounts. One of them has about $147,000 and the other one has $105,000. So it's holding, the entity is holding about $252,000 worth of cash. It has fixed assets. Fixed assets are essentially assets that need to be depreciated over a period of time. It might be 5 years, it might be 7 years, it might be longer, depending on what type of asset it is and how the IRS allows to depreciate it. So here you'll notice that, okay, this entity has computer equipment, it has dental equipment, it's got some leasehold improvements, just the normal stuff that a dental practice typically has. Now, if you purchase the dental practice, you may have goodwill in this balance sheet as well. Okay. Accumulated depreciation is essentially the depreciation you've taken in the past, and that's what shows up as a negative number over here as accumulated depreciation. And if you total all the stuff, it tells you that those are the total fixed assets you have. Okay. This dental practice has some other assets. One of them is a deposit, and typically a deposit is, you might have paid the first month rent or the last month's rent to a landlord, and the last month's rent is typically a deposit. So that's what this $6,000 probably relates to. Then this one also has a CD of $16,000. It has other assets of about $23,000. And the total assets are, you add the cash plus the total fixed assets plus the total other assets, you get total assets of $360,000. So those are the assets owned by this entity. Now keep in mind, these are owned by the entity, not the owner of the entity. That's a separate thing. Moving further, you have liabilities and equity. Let's talk about liabilities first. First thing is showing you that, hey, you have a balance of to a credit card. So that's that liability, about $500 for this entity. I'm going to skip over this long-term liability current balance for a second and then move on to the long-term liability. So this entity has a loan with Bank of America of about $229,000, and that's the loan it has. What this is showing you is that, okay, out of the $229,000, $56,000 of the loan will be paid in the next 12 months. That's the current liability, and it's being deducted. So the total long-term liability, $173,000. If you notice, this number is the same exact as this number, so we're just shifting it from here to here. It's just an accounting thing. That's what we have to do, show the current liability for this entity. Okay. So those are the liabilities for this entity. Some are short-term, some are long-term. Now, if you had a short-term loan that needs to be paid within the next 12 months, that would be in a line item here somewhere in this other current liabilities. Okay. Moving along, we have the equity section. Equity section shows you that, okay, hey, the opening balance equity for this entity was $272,000. The shareholder has taken distributions of about $276,000. Now this might be in the form of cash, or if they paid some expenses, personal expenses through this. Highly not recommended, but if they did happen to pay some, that would be included in the shareholder distributions as well. Net income is telling you that, okay, so far till June 30th, 2025, year to date, their income of the dental practice is $134,000. So the total equity is $130,000, and the total liability and equity is $360,000. Just an accounting thing, just FYI, the total liability and equity should always equal the total assets. That's just general knowledge from an accounting standpoint. That's the balance sheet. There's not much to it. It's a fairly simple document. If you have any questions, leave it in the comment below and we'll try to get to them. Before we move any further, let me introduce myself. My name is DJ Bola. I am a CPA in Texas providing bookkeeping service to dentists all over the US. On this channel, we post videos that help dentists increase profits, decrease taxes, and stay compliant with the IRS. Now, let's go to the statement of income and expenses, or more commonly known as profit and loss statement. Statement of income and expenses is always for a specific period of time. So in this case, it's from June 1st to June 30th, 2025. Okay. If you notice, there are a few groups of income and expenses, and you will notice there are two columns. Column 1 shows June 1st to June 30th, 2025. Column 2 shows January 1st to June 30th, 2025. So this is a year-to-date column. Okay. So let's look at group number 1. It shows you income. So this is the collection for the month of June, and this is a collection for year to date for 2025. So it's telling you the total income that you've had for the year is $942,000, or this entity has had is $942,000. Okay, let's move on to the expenses and the different groups of expenses. Group number 1 is employee expenses. Now, when we do the bookkeeping for clients, we only put employees that are non-dentists and non-owners in this section. This group will have hygienists, dental assistants, office managers, everybody else who's not a dentist in this and not an owner in this group. You will notice this practice has paid $222,000 in wages to different employees, and these are the payroll taxes related to those employees. Other employee expenses might be related to hiring people, or if you've had a holiday party or something in that in your practice, that would go in that line item. Also, let's say somebody got pricked at your office and had to go to the doctor, that would go in there as well. Okay. Contract labor, this line item is for, you know, any contract labor coming in, or if you had a hygienist come in for a day or two and she was contract or he was contract labor, that will go in there. If you had an assistant come for a working interview or something like that, that would, and not an employee, that will go in this line item as well, the contract labor piece. Okay, so this is related to employee expenses. Next group of expenses is the facilities expense. This has anything and everything related to the brick and mortar building, rent you're paying, any security expenses you're paying, any repairs and maintenance that you have, that will all go in here. Okay. The next group of expenses is overhead expenses. We're going to skip over that for a second and go to the professional supplies and expenses over here. This group has dental supplies and lab expenses and other dental and small equipment. So dental supplies and lab are fairly straightforward. You see that this practice spent about $37,000 in dental supplies and then $40,000 in lab expenses year to date. Okay. Other dental services and small expenses are typically related to if you're buying some loops and you know, maybe some dental equipment that is less than $2,500, that will go in this line over here. Okay, and this tells you your total, or this entity's total professional supplies and expenses is $78,000. Next group is associate/specialist expenses. This is where we record any associate dentists you have in the practice, any contractor dentists or specialists that come to the practice, they are recorded in this expense group. So if you notice, this line item is $122,000. What this is telling you that you have W-2 employees who are dentists and working at this practice. They have been paid about $122,000 till year to date. And these are the payroll taxes related to that. Associate dentists are typically the contract dentists coming in or any specialists coming in. They will be in this line item over here in associate dentist. So this group includes expenses related to any dentists who are non-owners, any contract dentists who are non-owners will be in this group, okay? And this is telling you essentially that you spent about, or this practice essentially has spent about $138,000 expenses related to employees who are dentists and specialists. And let's go back to the overhead expense group. So anything that doesn't really directly belong in the other expense groups will come over here in the overhead expense group, like accounting, advertising, payroll expenses, property taxes, travel. So all of that stuff goes in here, okay? Here's a line for the total expenses. So if you look at all the groups and you total the totals of these groups, that will total to this total expense. So the total expenses this entity has had a year to date is $616,000. If you subtract these expenses from the total income it's had, you will notice that the number is 325. So this is the net ordinary income of this dental practice. It is also the EBITDA. This line is the EBITDA for this dental practice. Moving on, we have other income and expenses. Anything that may not be in all the dental practices, we will put that in this section, other income and expenses. This specific dental practice has interest income of $285,000. So we put that here. Not all dental practices are going to have interest income. And it's not directly related to the dental practice income anyways. It's not related to the production anyways. So we consider that as other income. And then if you are a newer practice owner and you still do contract job, that will be here reported here as well. So you'll have another line item that says contract income, and it will show, okay, whatever contract income you had from your contract job. Let's move on to other expenses. Other expenses include interest expense. So this dental practice had a loan of $229,000. So you're paying interest on that loan. So that goes here. Now keep in mind, so what really happens in a loan situation is you might be paying each month $5,000, but the whole amount is not deductible. A portion of it reduces the principal, portion comes here as interest expense. So if $2,000 is interest expense, it will show up here as interest expense, and then the rest of the $3,000 is going to be deducted from the principal to reduce the principal amount of the loan. Okay, this is doctor expenses. This is where we keep any expenses related to the owner doctor. We want to be able to see, as a single practice owner, how much money are you making before you pay yourself and pay all the other expenses that are specific to your practice, like interest expense. Okay, so this one's telling us that this practice has paid $165,000 to this dentist as salary. These are the payroll taxes related to the owner, and then they're paying health insurance through the dental practice, and that's what's related to that. Now, if you had related party like paying your kids, then we might put those in here as well, and there'll be a couple of other line items over here. Okay, so this group includes expenses just related to the owner of the dental practice and the family. Okay, so then there you have the non-cash expenses. You're not paying for depreciation each month. It's just one of those tax journal entries we make each month to take that expense. So that's what that is. So it's just telling you that for the month of June, they had depreciation expense of $627,000, and for year to date, it's $3,700. Okay. Now, let's say you bought a specific asset. Let's say you bought a dental chair for $20,000 this year, and you took a special depreciation or a Section 179 or bonus depreciation in the current year. That will show up as a separate line item over here, and it'll show you that, okay, hey, you took a Section 79 depreciation of $20,000. So there will be a separate line item. Okay. Then this tells you what are your total other expenses. Total other expenses are essentially, these expenses over here, your interest expense, your doctor's total doctor expenses, non-cash expenses, that total up here. And then the total other income is other income, which is this one, minus other expenses is total other income. Okay, net income again is you add, this one plus this one is the $134,000. So that's the net income of this practice. So this practice had a pretty healthy net income. For the month of August, it was $68,000, and year to date, it's $134,000. Okay, that's kind of it for just the 2 pages of the profit and loss statement. If you have any questions, just comment in the section below, and we'll try to answer your questions. Let's move further from the profit and loss statement. There's the statement of cash flow. This is the cash flow statement that most dentists get. It's really hard to understand. It's really hard to explain for us. So we built our own. It's a little bit different. So what we did was we built our own cash flow statement, and in technical terms, this would be called the statement of cash flow direct method. We like the name "Where Did My Cash Go" report a little bit better, so that's what we call it. And where this is useful is to answer the very specific question, where did my cash go? So we get clients call us and ask us, hey, I noticed that my P&L is showing me that, okay, I made $400,000, but where did that cash really go? I don't have it. And this report answers that very specific question, where did that money really go? So let's go through it real quick so that you understand how to read this report. Now, it's just telling you that, hey, again, it's telling you that you had income of $193,000. Basically, you collect $193,000 in June 2025, and then for the year you collected $942,000. So it's telling you that's what you collected, and then you paid, dentists $6,400. You paid your associates $132,000. You paid your employees $250,000. So it's just telling you, going through the thing, and it's telling you where exactly you spent your money. And from the operations of the dental practice, the practice has generated $323,000. Okay, so that's what happened. So your dental practice, or this dental practice, is generating about $323,000 for the first 6 months. Now let's see, where did that money go? So that's where clients get confused. Okay, hey, I do see how much money I made, but where did it really go? So here's what it tells you. It tells you that, okay, you paid off your credit cards from the beginning to the end of the year. You've paid off and lowered your credit card liability by about $294,000. Then you paid your loan off, and you paid about $25,000 in your loan payments now. So you're $25,000 richer because your liability, your loan has gone down by $25,000. So that's what this is telling you. So you spent about $25,000 of that cash in lowering your liabilities, or lowering the liabilities of this dental practice. And then the next group it has is the cash flows from shareholder activities. This tells you where the money was spent for the shareholder. Okay, so it's telling you that, okay, $6,000 was spent for the owner's health insurance, $12,000 for payroll taxes, $165,000 in salaries. and the owner took $276,000 in distributions. So it's telling you that in one way or the other, about $461,000 of cash was used for the owner, okay? And hence, your cash has gone down from the beginning of the year till now by about $164,000. And what it's telling you here is that, okay, at the beginning of the year, you had cash of about $416,000, okay? See the date over here. And then the cash has gone down by 164 grand. So this number minus this number. So this is the cash you have available at the end of June, okay? And then this is just letting you know that, okay, these are the two cash accounts that you have. These are the two total cash you have. So the difference between this and this is $0, okay? So this column again is for year to date. This column is just for the month of June. Now, I want to point out that it is highly possible that your CPA does not have this report, or if they do have it, they're going to charge you more for it, because this is just something that they have to do extra. So just FYI, this is not a common report, not available in most other accounting softwares. Just FYI, okay. We can provide this each month, but right now we don't provide it each month for all of our clients. It's just, if you request it and you ask us the question, hey, where did my cash go? We send you this, and it's really easy to understand, and we can walk you through it, okay? So going back to the monthly package that we provide, the monthly financial statements we provide to our clients, and maybe you should be getting from your bookkeeper/CPA. So this is where it's at. And then we also provide this report. This is, again, the same statement of income and expenses. However, it's broken down month by month. I like my clients to have this so that they can review it and see if there's something odd. I mean, look at the numbers. Are you feeling like your collections reflected in the P&L month by month are what you think they are supposed to be? Or are they lower, or are they higher? If you have any questions, or if our clients have any questions that, okay, why is this too much, or I thought it was going to be lower, we look at it with them and figure out, okay, if there was an error made on our part, or just the understanding of the business owner is not quite where it's supposed to be at. I suggest my clients to look at each line item and see if anything jumps out to them and seems unreasonable. Let us know. We can look at it. And for example, this one is $54,000, but typically, what happens is there are 3 payrolls in some months, and that's probably what the reasoning is. And hence it's more than the others. However, if you cannot tell why a specific line item is more than the others, if you can't, as the business owner, tell why this number is more, then you need to call us, or talk to your bookkeeper, so why it is more. Okay. Same thing with the other line items. So just go through one by one each line and figure out, okay, it's the monthly P&L looks reasonable to you. This is another report. This is just telling you, okay, hey, how are you doing this year, which is June 1st to June 30th, 2025, compared to last year. It's just telling you, okay, your collections have gone up for this specific month, how are your expenses. I think for this specific report, I just like clients to pay attention just to the first line, not to the rest of the stuff. I just want them to know, okay, how am I doing compared to the previous year? Are my collections up compared to last year? Are they about the same, or have I gone down? Okay. And then we have this report, which shows you how are your income and expenses this year to date compared to last year to date for the same period. So this one is telling us that, okay, last year, January through June 30th, 2024, the collections were $1.04 million, but this year in 2025, the collections are $942,000. So collections have gone down by about $102,000. The typical scenario, and the better scenario, is every year you go up by about 8%, but this is a large practice. So yes, there will be ups and downs, but if you're like a less than $1 million practice, generally speaking, your number should go up pretty much each year from a collection standpoint. Next thing is you want to look at expenses, each group, and figure out, okay, am I about the same or am I going up? If your income has gone down, if your collections have gone down, your expenses should generally go down as well, especially for employee expenses, professional supplies and expenses, and associate expenses, because these are directly related. If you are collecting more, you're producing more, you need more people to work, you need more dental supplies, you probably need more dentists to work. But if if you're producing less, then you don't need that much help, you don't need that much supply. So those things will go up and down. These expenses, the facilities expense and the overhead expense, should essentially remain the same because the building doesn't change. You're still paying the same rent in most years. So those things should really not change. You're still paying similar expenses when it comes to overhead. So they should remain essentially the same, okay? And this is just telling that, okay, how has your EBITDA changed or ordinary income changed from this year to last year, and so on and so forth, okay? So that's the P&L statement and the financial statements, at least from the package that we provide to our clients. What I recommend my clients to do is when they're reviewing the financial statement package, I really like them to pay attention to a few things, okay? When you're looking at the P&L statement, you want to make sure you're looking at these percentages, and these percentages are there for a very specific reason, okay? We provide benchmarking analysis to our clients and let them know, okay, where these percentages should be. They want to make sure that they're around that, they're not way far from it, okay? So you want to look at the employee expense percentage, you want to look at the dental supply stuff, and make sure that, okay, you're in that range itself. If you'd like us to do a video on benchmark analysis, leave us a comment, and if I get 10 comments, I will go ahead and make a video for benchmarking analysis. That's all I had. If you have any questions, leave it in the comments and we'll go from there. Like and share. Thank you.